A good one is DNA sequencing. The first whole human genome was sequenced. Now, I learned that it was completely sequenced just a few months ago, but anyway, we thought it was sequenced in 2003. 2003, so you go back and you figure out how much did that cost. It cost $2.7 billion, and it took 13 years of computing power. Even if costs had dropped 75% the next week, and computing had had increased in power, by 75% and speed, still wouldn't have been ready the next day. Okay, now we're down to $500, a few hours of computing power. Now we're talking.
Cathie Wood is the CEO and CIO of ARK Invest, an investment management firm Wood founded in 2014. Wood has served in different capacities through her over 40 years career, including as an economist, hedge fund manager, and chief investment officer. Since she founded ARK Invest in 2014, she has pursued her idea of investing in the future through actively managed exchange-traded funds based on disruptive innovation. Wood believes disruptive innovations such as artificial intelligence, DNA sequencing, gene editing, robotics, electric vehicles, and blockchain technology will see exponential growth within the next 5 to 8 years, making them very important for investors. While some of Wood's choice companies for her ETF have not been performing well lately, the Innovation ETF became the largest actively managed ETF in December 2020, with $17 billion in AUM. In an interview with Tom Knight and Michael Saylor, Wood talks extensively about her disruptive innovation picks and how fast the technologies will grow in the coming years. Before we get to Cathie Wood's interview, remember to smash the like button and subscribe to the channel. Enjoy the video.
Disruptive innovation. What's so creative about that? Every day I hear this word, every sentence. Well, that is not true in the financial markets. When I founded ARK in 2014, this was considered a crazy idea to focus exclusively on disruptive innovation. Now, disruptive innovation to us means something very specific. It needs to meet, in order to become a part of our platform, the disruptive innovation needs to meet 3 criteria. One, a learning curve. So technologically enabled innovation, a learning curve characterized by Wright's law. And I'll just rattle that off quickly. It's a relative of Moore's law. Moore's law is a function of time, every 18 months to 2 years. Wright's law is a function of units, and it says, this was from the airplane manufacturing days, the new technology of the day, for every cumulative doubling in the number of units produced, so 1 to 2, 2 to 4, 4 to 8, for every cumulative doubling, costs associated with each technology decline at a consistent percentage rate. So in the DNA sequencing space, that number is 40%. And that's for short read DNA sequencing. In the long read DNA sequencing space, it's 28%. In the battery pack system, we're known for Tesla, it's 28%. That's for the EVs themselves, it's 15%. So first criteria is Wright's law. Second criteria is that the technologically enabled innovation has to cut across economic sectors. We have to believe it will become mass market because it applies to much more than just one sector. And then the third characteristic is that it is a launching pad for more innovation. So in the case of DNA sequencing, which is a foundational innovation platform, we probably wouldn't have CRISPR-Cas9 gene editing today were it not for the advances in DNA sequencing. So that's what we mean, and it was really, it had disappeared from the lexicon of the financial markets because of the muscle memory associated with the tech and telecom bubble. Yeah. That's why what we were doing seemed so crazy. When I use the word disruptive, financial managers do not use disruptive. That seems scary, right? So that sounds risky. But we were trying to emphasize, wait a minute, there's something big happening here.
Apart from the potential of each innovation as a standalone tech, Wood also explains there is a convergence between these innovations, a point at which the innovations converge and together give way to exponential growth. To get a better grasp of how everything interconnects, Wood describes, however, analysts, all with different areas of specialization, work and brainstorm together.
So in terms of time horizon, Michael, and before I answer that question, I want to introduce our 3 genomics analysts. I don't know where they are. Anything I say here today has been inspired by them. So Simon Barnett, Ali Ehrman, and Pierce Jameson. Simon, Ali, and Pierce, we will sit in on a brainstorming session with all of the other analysts from the firm, each one who is specialized in a technology. So the way we've set up our firm, I'll get to your time horizon in a minute, the way we set up the firm was our analysts are not healthcare analysts. They are focused specifically, in Simon's case, for example, diagnostics and tools. Ali is therapeutics, and Pierce is more plant-oriented biology. But they're doing much more than that. They're just they're areas of specialization in genomics. But at this Friday meeting, we have our artificial intelligence analysts, our robotics analysts, and many other analysts. And we brainstorm. Now, why do we do this? It's to get at what you're talking about, Tom. Genomics analysts have a good understanding of the brain. Neural networks are patterned after the brain. Our artificial intelligence analysts must communicate with our genomics analysts, and they do. We have a very collaborative. So I believe we are, at this time, seeing an explosion in the convergence between and among technologies. And, it's one S-curve feeding another S-curve feeding another S-curve, and there's going to be explosive growth that most people in the financial world do not expect, because they're not set up this way. They're set up very siloed by specialization. Our investment time horizon is 5 years. We have to believe that within 5 years, we will be able to model out a company's, revenue growth and EBITDA growth.
Wood speaks more extensively about her vision for some of her disruptive innovation picks. She explains that the technologies such as the internet we enjoy today can be traced back to 20 to 30 years before the tech and telecom bubble burst. Though the foundations were laid then, the tech was not readily available or even cost-effective. Now everything is more readily available and affordable. One believes the same thing has been happening with disruptive innovations like DNA sequencing and robotics. The foundation for their exponential growth has been laid, and they have gotten to the stage of immense and exponential growth. Within the next 5 years, Wood thinks these technologies are going to really take off.
It is astonishing, and costs are a big part. That technologies have to be ready, cost has to be low enough. The problem with the tech and telecom bubble was too much capital chased too few opportunities, really chased a dream. All of the seeds for the explosion in innovation that's happening now were planted in the 20 years that ended, and Tom, you might say 30 years
completely
that ended in the tech and telecom bubble. And those seeds needed time to gestate. The technologies weren't ready. Cisco and Oracle and Hewlett-Packard were not going to take us into the cloud world, the AI world, the way we are now. So the technologies weren't ready back then. The costs weren't low enough. A good one is DNA sequencing. I hope you don't already know this, given the audience. Maybe you do. I apologize. But in the financial world, this is pretty impressive. The first whole human genome was sequenced. Now, I learned that it was completely sequenced just a few months ago, but anyway, we thought it was sequenced in 2003, right?
No, we didn't.
We, financial markets, 2003, so you go back and you figure out how much did that cost. It cost $2.7 billion, and it took 13 years of computing power. Even if costs had dropped 75% the next week, and computing had had increased in power, by 75% and speed, still wouldn't have been ready the next day. Okay, now we're down to $500, a few hours of computing power. Now we're talking. What's beautiful about what's gone on, for us at least, is there was a shift because of the tech and telecom bust, and then the '08 and '09 meltdown. The risk aversion in the public equity markets became extreme. Career risk, business risk, that's all anyone thought about, and they figured that just let me stay close to my benchmark and I'll be fine from a business point of view, career point of view. Wrong. They actually are being dealt out of the game by robo advisors and so forth. What's happening today, nobody really understands in the financial markets because they've invested so much of their time in the benchmark stocks, which are very backwards looking. So I believe that was the most massive misallocation of capital in the history of the world. And one of the things, no, I'm not exaggerating, in the history of the world, and that, to be a little disruptive in the financial markets was to start investing in the future again. I had one person who wasn't in our business. I was trying to explain what I was trying to do before starting the company. He said, "Oh, you mean the future of investing is investing in the future?" And I said, "Yes, yes." That's how much the financial services industry had lost the plot, and we're considered. In the beginning, most people thought we wouldn't make it. But the convergence of these technologies is creating explosive opportunities like Tesla. So to give you just to answer Tesla, what did we see? We invested at my old firm in 2012 and since the beginning in 2014 at ARK. What did we see? This was not an auto company. Yet auto analysts were analyzing it. What kind of analysts should have been analyzing Tesla? We have 4 analysts focus on it at ARK. Robotics, autonomous vehicles will be robots. Energy storage, they will be electric, cheaper. Artificial intelligence, they will be powered by artificial intelligence. And software as a service, over-the-air software updates to change performance. So we had a competitive advantage. Most people were laughing at us because the traditional auto manufacturers and auto analysts were laughing at Tesla, saying, "Oh yeah, right, Tesla's going to build its cars on top of cell phone batteries. Ha, ha, ha. It's impossible engineering feat." It wasn't impossible. Elon did it.
What do you think about Cathie Wood's timeline for her picks? Many analysts believe that her timeline is far off the mark, and we are not going to see any real developments in most of these fields for many years to come. But there is no denying that we are getting really close to the revolution. In fact, recent events may have moved the timeline forward. We are talking about the sanctions against Russian oil and how many developed countries are trying harder to transition from fossil fuel to renewable energy. Please leave your comments in the comments section below and smash the like button. Thanks for watching.